Good morning, good afternoon, and good evening to those of you around the world. Welcome to Trading Rebellion with your favorite traders and analysts at Trade the Chain. You're joined by myself, Director of Research at Trade the Chain, as well as Senior Research Analysts CJ and Monte, fresh off of their daily show that they do every single morning as well. If you did not catch that, maybe go back and rewatch it, as many tidbits get dropped there that do not get dropped here. And if you're wondering why I look like I'm in a white void, I am moving tomorrow. So a lot of my stuff is gone or sitting in a pile somewhere. So apologies about my appearance today. But, yesterday was FOMC. DXY is ripping today. Gary Gensler had some not so nice words to say about the crypto industry. And we're going to break down how all of that may impact price action going into the weekend. So first thing we are going to bring up is, there isn't too much data here in regard to FOMC, but, just a reminder, yesterday was FOMC. We had the press conference. We got a 25 basis point hike. And Jerome Powell's rhetoric, and CJ and Monte, correct me if I'm wrong here, but it really wasn't too dovish or hawkish. It almost, to me, kind of signaled as, business as usual. Nothing's really changed in the Fed's outlook. They're happy with the progress, but they still have a lot of work to do. They're not committing to any hikes before the end of the year, although that is still something that is plausible. They are, we're pretty much not going to get any news until the next meeting, which is in 8 weeks. It's in, I think, end of September. So, there's a kind of a big gap here in terms of, if you're a bull and you still think inflation's coming down and the Fed is eventually going to decrease rate hikes next year, then your narrative is still mostly intact. And if you're a bear and you think that we're going to get another rate hike and we're going to keep rates higher into 2025, you're still valid. It's just the market does not really believe what that thesis is right now. So, equity is ripped higher. DXY is also ripping higher. So we've got a heck of a couple of things to break down. And we're going to get into DXY in just a couple of minutes. I know Monty has some interesting outlook on that, as do I. But if we look at the Thursday data, the GDP advanced report, 2% expected, 2.4% is what it came in. And when you're kind of thinking about that, Monty, before we pull up the DXY chart, I can understand why DXY jumped on this. GDP strong, dollar strong. Also, good economic progress is, potentially, perceived as immediately bearish in this whole context of the Fed tightening. But equities, ripped high. So I'm going to pull up the DXY chart just really quickly before I let Monty kind of take over here. But we've kind of had the 101 level lined out in the sand. We dripped back underneath it on FOMC yesterday, and then we just ripped higher right after the GDP announcement. Now, if it does close beneath, 101 and a half, that could signal maybe a slight pullback to the 101 level again. But, CJ Monte, this kind of giving me a complex pullback meme ability right here. It does seem like, if anybody's seen that complex pullback meme, that is pretty much the textbook of what we all laugh about. So, Monty, what are your thoughts around DXY? Do you think we're heading higher? And do you think that if we do head higher, it may, hurt either crypto or equities?
Okay. First, let me just say, yes, I do think we're going higher in the dollar. And yes, I do think it will hurt both crypto and equities. And this is something that CJ and I discussed this morning on our morning show, Money in Motion. But last week, I think, was a bit anomalous in the sense that we had positive price action in the DXY and positive price action in equities. That's something you don't often see. And I think that was for a multitude of reasons, two of which being, one, the week prior, the DXY had a historically bad week in terms of both, price action and velocity with which it fell below that $100 level. It happened very quickly and violently. And that allowed a lot of stocks to rally. And that rally continued even after the dollar went below that critical $100 level. It got bought up and started to rebound. That, in conjunction with the earnings and FOMC and then the GDP print, like you pointed out, I think all of those things are leaning me to believe that the DXY is going to grind higher, at least to, that 102 level. And if that does happen, I think we see a pullback in a lot of the names that have been running pretty hard in the last couple of weeks here. And I can get into those names in a little bit. But for the meantime, what I'm seeing with the DXY, I think we're going to start to see a return of that relationship where DXY up, equities and crypto down, even though that's not what we've seen in the last 10 days. I think a lot of that had to do with earnings, FOMC, GDP reports, and then also the fact, like I said, that the DXY had a historically bad week just, the week prior. So you have to take all of those things into consideration. And I think it paints a picture that's positive for the DXY, but negative for risk on assets.
And one thing to tack on is, DXY and crypto have been pretty inverse. I mean, it's been pretty one-to-one. Nothing ever is. But if you go look at running from July to July 15th, crypto is moving higher. DXY bottoms. Crypto has been moving lower ever since, right? But we haven't seen that reflected in equities, and that's kind of the one thing that's been confusing me the most. Is obviously, I mean, we trade crypto the most, maybe not CJ as much, but I know he's definitely in it. But what is our signal? And I don't have an answer for this, so this is, it's okay if you don't either. But what's it going to take to really find that trade in equities as well, or is this just something that we just need to sit and be patient for?
I think we're seeing the move right now. I mean, pull up the Coinbase daily chart and take a look at it.
Do you want to pull that up on yours?
Sure.
I'm on only on the laptop today.
Oh
so
yeah, my bad. I forgot you got your stuff packed up. But yeah, I mean, just take a look at that candle. I mean, that is ugly looking, and this has been the means of exposure for a lot of people in the crypto space in the last month. This is where they've been getting their exposure. It's been great for Bitcoin. It's been great for the crypto related equities. We've seen lots of positive price action, but today, I mean, this is looking very ugly. Not very often do you get this sort of candle. And, we talked about what we look for when we're waiting for confirmation that an uptrend is over and a downtrend is beginning. This is what you want to see, is this blow off top, the wicks at the top, indicative of distribution at that level. And then you see this kind of, one day of positive price action, and then it's sold into hard again. So now we've put in this kind of lower high here. I think Coinbase heads lower. That does not bode well for Bitcoin. It does not bode well for Riot or for Mara or for MicroStrategy. All of them look very similar in the sense that they're showing.
I'm not going to lie, Monte. That looks like one seller because I'm not seeing. I mean, I'm not seeing too much volume. And go back to the Coinbase chart, there was a good example here to pull up. So
You're right.
If you look at the drop on November of late 2022, see how much volume is in that drop, and then you have a quick buyback, right? Because obviously there's a lot of money changing hands. People are liking that level. I'm not seeing any volume for that Sith lightsaber type candle, and I think that's worrisome. So, and it seems to be similar on the other assets you showed as well. And I want to bring CJ in here. CJ, does this, Monty mentioned lower high, and I tend to agree with him, but is your Livermore chart senses tingling here? Because we're starting to, kind of have the blow off top, starting to form those lower highs. We talked about the Livermore cycle in depth, several sessions ago. So does this seem like something that you may want to short if it does confirm as is?
I mean, yeah, it's a decent setup. It's not something I would take personally. I'm glad to just sidestep a decline, especially in assets like the crypto equities, because I want to buy them desirably at lower levels. And so I'm kind of glad that you're starting to see this breakdown. We were talking before the show as well. There's a lot of unusually similar price action and feel to what we experienced in 2019 and early 2020. And crypto during that time was very, very boring. And equities were doing quite well. It's interesting now that you see the crypto equities, really leading the way. But I agree with Monte. I don't think this bodes particularly well for Bitcoin in the short term, because I thought Horst also made a good point last week when he was talking about the crypto equities being, 95% priced in. Obviously, that claim has aged very well. And it appears that you're starting to see that ETF news kind of wane. I think it's really good and important longer term going out into 2024 and 2025. But, perhaps with this negative price action and this cool off in crypto equities, we get a good buying opportunity, sometime somewhere, maybe in a couple of weeks. But it's tough to say right now. Just going by a technical analysis perspective, you're kind of just still playing the downtrend. I haven't really done a whole lot in Bitcoin because it's been difficult to trade. We've talked about the altcoin markets, how it's very peer VP. So it's just hard to make profits when there's not a lot of new money coming into the space. But yeah, in the short term, you kind of just got to go with the momentum, in my opinion.
I agree. And Monte, I see you pulling up the Bitcoin chart. Before we get to that, I do just want to drop, the one tidbit of news that I thought was interesting. And that's Gensler. And this isn't just today or yesterday or whenever this quote came in. He's been kind of saying this every single week. Like the XRP ruling press conference, he was kind of alluding to crypto being full of fraudsters. On his other CNBC interviews over the past couple of weeks, he's said similar rhetoric. And I think, you both mentioned the kind of bullish trade being around the ETF. And I think the next date that we have is maybe August 13th for one of the ETFs to be either pushed back or potentially, outright denied or of course approved if Gensler's feeling good. But it doesn't really signal from his language, his repetitive language, that the spot ETF trade is secure right now. So before we dig into the charts, does this kind of, hearing this once is concerning. Hearing this 3 or 4 times is when I start to think about making a trade around it. What are you guys thinking? And maybe Monte, if you just want to pull up the BTC chart to kind of go more in depth on this, feel free.
Yeah, CJ, go ahead, because I think we feel very much the same, but I think what you had just said kind of sums it up, but please go ahead.
Yeah, I don't think Gensler really has that much influence, especially when in the face of capital like BlackRock. Obviously nothing's 100%, but I think this is very close to 100%.
What's their record against the SEC? 350,
575 and 1 or something like that. So
they're like Floyd Mayweather in the ring.
Yeah.
And even if it doesn't, we still have the catalyst of the halving in 2024 and 2025, in which case, institutions still may use, other companies like MicroStrategy or like Coinbase as a potential proxy. But obviously that would be very influential if the ETF was not passed. But, we have to kind of think in probabilities and less than in terms of possibilities. That kind of makes sense, but it's something to consider. What do you think, Nick and Monty? What do you guys feel about this ETF?
Well, Monty, go ahead, because you were actually going to say something when CJ spoke. So go ahead.
No, I very much agree with CJ. He can say what he wants, but at the end of the day, BlackRock has trillions and trillions of dollars and an essentially undefeated record against the SEC when it comes to filing for ETFs. They do their due diligence. And is he wrong that crypto is full of hucksters? Not necessarily, but does that make BlackRock hucksters for entering the space? No. So I think those comments more or less will, land flat and be irrelevant. But I do still think that what CJ said, or his reiteration of Flowhorse's point being that much of the ETF news is already priced in anyway. I think we're seeing that play out today in the crypto-related equities, and I think Gensler's comments are less relevant than any news that comes out of BlackRock. So.
Yeah, and just to take the term huckster, the Gensler's industry that he served before he wanted to attack crypto is, by my count, filled with probably more hucksters. 7 billion fine for Deutsche Bank. Wells Fargo was building fraudulent accounts. They're couple other banks doing very similar to what Wells Fargo was doing recently. So, I mean, if he wants to go ahead and look in the mirror, I would very much invite him to. But when it comes to this trade, I agree with you guys on horse. Trade is likely priced in. If the trade's likely priced in and Gensler's going to talk his crap and delay the process to potentially end of Q4 into 2024, because eventually I do think he's going to lose. He can't keep losing court battles and talking crap on CNBC and still keep a job or hold respect in the industry. But that doesn't mean over the next 3, 4, 5 months that can't introduce some pain into the market. So I'm not a bear. I'm not a full bear because I still think we can make a higher low above 25K and still move higher. But if I had to guess, the inability to break through 29.5 on the FOMC yesterday with SPY making a new high and Gensler talking his talk, it's certainly not giving me a lot of confidence heading into August. So I'm still going to keep on the short territory until we crack above 29.5K. But I'll be I've got my alert set for any time Gensler gets tweeted about, because I want to know what he's saying. And the harsher his rhetoric seems to have an application to price action, at least right now. If we get above 29.5K, maybe all that bias goes out the window. But price action is a combination of technical analysis, fundamental analysis. Fundamentals aren't pretty, neither are the technicals. So I'm gonna float my momentum and where my bias is, and that is I think a little bit lower in the shorter term. So with that being said, are there any other crypto assets we want to cover now? I know CJ's got oats that we definitely want to talk about. So actually, yeah, let's go bounce to oats, and then we can come back to crypto a little bit, because yeah, CJ's the oat goat. We've got Ryan Larson patiently waiting for 10 minutes to hear what's going on. So let's bring up CJ's chart and tell us what's the haps on oat futures.
Yeah, so we talked about this a little bit this morning about the dangers of crowded trades, namely playing out in silver most prominently today.
Yeah.
But what I like to see in terms of when these assets become crowded is just seeing that zero level hit. Shows that commercials have really been selling. Also, when you look at the commercial movement index, when you get spikes below this 40 level, that's a good indication that the larger commercials within the futures market have been distributing throughout these 3-day candles and throughout that uptrend. Also, another thing that would check the box for me in terms of oats is that retail and large speculators are both net long. Do you want to kind of take the opacity down on that a bit? Yeah, so then you can see the specs behind there long as well. So, that's where, traders can generally get into trouble. And, oats is starting to show its first sign of weakness. And also when you look at the grain markets in general over the last week, they have been kind of collectively weak. So, we opened up positive today and started to see weakness. Talked about entering the short initially on this one. And, it's good to see weakness coming through at the end of the day. And now we've closed. So it'll be interesting to see how that, wraps up. But it does look like, potentially good short setup here, kind of ending of the echo bubble of oats and what it had in 2021. So that's what I'm seeing there. The only other thing that I've been messing around.
Well, before you move forward, just for transparency purposes, are you currently short oats, or are you waiting for the setup to confirm?
Oh yeah, I shorted it.
Okay. I just want everybody to be aware of what we're spitting on the show. So.
And so you're kind of seeing the inverse in coffee. I mean, this trade for me has been really painful because it's just, keeps going up and down. But hasn't been invalidated yet. You still have an interesting bottom kind of forming, looking for this level to flip from previous resistance to now new support. But ultimately, you have the exact same idea going on in coffee, just, inverse. So those are my two commodity trades and the things that I've been looking forward into next week. And then silver, probably a nice target as well if you're going to bet on the dollar uptrend. So I might go into that one as well, but haven't really decided. Just been focusing on, coffee and then, of course, oats.
Nice. Well, I appreciate that. I think those are good trades. Definitely will be key, especially, if you're not in the TTC community, CJ's been keeping up with those pretty much every single day at this point. So if you're following his trades on here and you're not in TTC community, we do have a 14-day free trial in which you can get signed up, follow CJ's trades, Monte's trades, my trades, our global community's trades, and follow along there. So you're not missing out on the other 20 hours of the day that we're trading and not on YouTube video. But another coin that I wanted to bring up, featured, of course, in the title today, is what I've nicknamed Orb Coin, and that is World Token. And so I like to nickname coins that I'm not and particularly bullish on. Kind of Trumpian of me in a sense to just make fun of things instead of take them seriously. But it's a bit tough to take this coin seriously when the business model is built on literally scanning people's eyeballs around the world. So that's just enough reason for me to short it in general. But I will say, I am in a short right now. I would not recommend shorting it at this level as it's just kind of breaking out of the VWAP band. But one thing I thought was interesting, and I'm going to move to the 15 minutes over the 1 hour here, is the 15-minute estimated 200 moving average. Just kind of a small secret in the crypto sector. This is a very heavily adhered to lower time frame trend. And as you can see, if you took longs on the wicks just below, was a good trade. And every time it's been, busting back over, it's been getting rejected. And I shorted, I did not short here. I shorted, right around here, this rejection, and I've been playing it down. I certainly think it's likely to grab these lows down here, especially if Bitcoin and Ethereum start to drip lower, which it seems likely they are, at least for today's session. And I do think that we will likely end up seeing it here. Now, it could chop and do something like this and grab that 15-minute moving average again before coming back down. So that's why I want everyone to be careful. Anytime you see wicks like this, definitely something to be cognizant of. But I am not feeling the Orb Coin vibes right now, and I do think that it's a good short opportunity, provided it stays below the 15-minute estimated 200 moving average. So Monte, CJ, I don't think CJ's really been trading this much, but just from looking at the chart, I mean, it's still a fresh chart, still a lot of narratives that could come in, but at 1% supply released, 25 billion fully diluted valuation. I think it was at $1 billion market cap for what the available supply was. And I think they only have a couple million users, and it's not even in the US. So what are you guys thinking on this? Do you have an opinion, staying away? Are you bearish? What are we thinking on Orb Coin?
Well, I'm certainly long-term bearish. I'm currently not in a position, just because of the fact that, what we often talk about, if a trade gets too crowded and this is just like such an obvious short, right? Like you just listed off 3 reasons why, this would be a good short play, but kind of counterintuitively, that almost makes it a little bit dangerous to short, right? Because then you have so many people on Twitter rushing into it, and it's not really flying under the radar. And that sets it up for some pretty volatile short squeezes when people choose to exit their positions and take profit. And I think that's something that you need to watch out for with Worldcoin, is some pretty violent squeezes on the way down. I think it's a very crowded trade. I think lots of people on Twitter are talking about it. It's pretty easy to dump on. And I think because of that, it makes it a little bit dangerous. So it's a bit counterintuitive, because the same reasons that I would typically like a short, I'm staying away from this one. But I think the main difference is this one is on everyone's radar already. I'd rather short something that's kind of flying under the radar, therefore protecting yourself from those short squeezes. And I think there are plenty of examples of assets that are going to go down alongside Bitcoin, and you can short them with more confidence because the trade is less crowded.
I completely agree with Monte. I also just want to add that if it goes down, it probably will go down decent amount, but it's just like the potential like risk reward. Like it's probably somewhat difficult to make 20% on something like Worldcoin. If it falls, let's say 20% in the next few days, that could certainly happen. However, I think it's just as easy to get like a spike of 10% of just like a short covering rally. So it's just tough down here in terms of like risk reward. Like if you're bearish, you're really doubling down on the weakness of this asset, which it is. But I think that Monte makes a really good point as well in terms of like what there is potentially to lose if people start getting squeezed. But
yeah, and it's a
now
good
it
point to
doesn't
make. I
look
mean,
like
look at every time it's formed one of these wicks, it's had some sort of buyback, and that's why I was like, don't short it here. It's just stepping out of the VWAP band. It'll probably come back up, and it may grab this liquidity up here. Potentially could grab something up here. So I completely agree with you guys, but I would, and it's one thing that I don't want people to just start jumping into coins just because we're interested in them, or it's in a title, or one of us is in a short. Like, we've been doing this for quite some time, and we know how to manage our risk, better than most. So, wanted to talk about it specifically because it's been talked about so much, but completely agree with you guys. Don't be diving into shorts here. I wouldn't dive into longs either just to fade me. This is one that I think you can be patient on and wait for a good setup, because if you go and look back, if it starts forming this same kind of wick touching the 15-minute moving average, and that's a really good scalp. Maybe you're sitting at the desk, you got 2 hours for a meeting, throw on the 1-minute candles, drop it 0.5%, make your lunch money and walk away. So I think for that opportunity, it's good, but I wouldn't be swing trading this or holding anything overnight in Orb coin. And I'm not going to call it World token. I'm calling it Orb coin, just because that's what it deserves. So let's move on to another meme coin that has been heavily talked about, and that is Doge. And I think for anyone who was paying attention to the kind of Elon X saga, and I'm sure we're, look at the that favicon in the top right. I hate the X on the favicon. I've actually been like, Monty, CJ, I don't know if you guys have been doing the same thing, but it's been catching my eye, and I'm keep being like, why is this tab up? This is a weird, it looks like a PORN type tab, so, I had to, I'm not going to continue down that path, but I think we all, I hate it. But, Elon had an X in his location that was followed by a D with the D slash. And I think that D with the little slash on the long end of the D, I think it has something to do with Ethereum, which is why Doge chose that logo. But a lot of people took that logo or that location letter as a signal that Doge may be integrated into Twitter in some sort of financial services way. So, we obviously had that run up pretty much until 2 days ago. It was unable to break that, kind of trend that I had lined out. And now we've just kind of flatlined ever since. So, are you guys interested in trading Doge? Do you think that it has any sort of narrative around this Elon perspective? Are you holding a moon bag in case Elon introduces it into an integration? What are you guys thinking?
If I was more bullish, like macro right now, then perhaps, yeah, I'd definitely be willing to take a shot at Doge. I've done it in the past, Doge and Sheeb, and they've paid off quite well. But I think this is another instance where we've had a crowded trade, people have made a good amount of money, and now that it's been kind of priced in, you're going to see some significant profit taking as the market goes risk off. And I'm not just talking about the crypto market. I'm talking about, the equity markets in general. If they are switching to risk off and the DXY is rallying, like we mentioned, I really don't want to be long anything risk on. And what's more risk on than Dogecoin? Not a whole lot. And I know a lot of it is contingent on what Elon says and does. And that's just not something I'm interested in trading. It was kind of like back when Trump was president, he could tweet something and, move the market 3%.
Yeah, I miss those days.
Right? Like those were those were
we need a president who cheerleads the stock markets.
I think like the first Elon Doge tweet was like a 20% candle, if I recall correctly. It was something insane.
He did it back in like 2018 in the
it was
CEO of Dogecoin. You remember that?
Yeah.
Sorry to interrupt, Monty. Continue.
No. Great points. I mean, he's been involved with it for quite a while now, so it makes sense for that relationship to continue as he takes Twitter from Twitter to X. But
oh, go ahead. Sorry.
Like, what in terms of integration, this goes back to what we were talking about before the show. We are kind of debating this topic, but like, what good is Dogecoin integration really for Twitter? Like, are people going to be tipping other people in Doge? Are they going to be like, converting US dollars into Doge at a more exorbitant rate? Like, I don't know.
That's a really good point, Monty. And that was something I was thinking. It's like, oh, well, if he integrates Doge, and if he does integrate Doge, and somebody can send Doge or donate Doge, Doge is going to rip 10, 20%. That I have no doubt about. But, after that trade, just thinking about Monty's perspective, why would they not just do Xcoin and treat it like Reddit or Twitch? It's easier to manage from a financial services perspective in that fashion, or you just link it through Stripe, and I'm sending Monty $5 for a literal less than 1 cent fee. I mean that's what Venmo does and stuff too. So I understand why it would pump Doge if it happened, but I also think that it would be short-lived if it did, and B, it's not even likely to happen, at least in a V1 perspective, because Elon does not control Doge. Someone could, God forbid something happened to the network, and then that's his single, financial rail. I just don't think that's likely, so he can play all the games he wants, but just looking at this chart, we've talked about this theory many a times. This is why I was short Bitcoin at 30K, lower highs, lower lows. Until you can break that higher term market structure, I don't want any piece of it. So until it can break the high from pretty much, up here, or I guess, the lower, and it did get up here, but look at the bodies still, equal or lower to that. So until it can get above this 9.5 cent level, I probably don't want Doge, but I will say if it does get down to 5 cents, 6 cents, down to these 2022 lows, I'm probably going to be a little bit interested just because of how it's performed in every single market cycle. If you're holding like a small Doge bag or Pepe bag and at the near lows, that's not a bad, life bet. But I still wouldn't put, a large amount of your cash flow into that regardless of your opinions. So,
yeah, agreed. And
to me, Doge is like Doge or Pepe is like a 1 to 5% trade at max. You know what I mean?
Of your portfolio.
And that's what I mean in an actual bull market. Like this whole integration and whatever Elon wants to do with X, like I think it's just kind of, it doesn't even matter unless there's a little bit of froth in the market. And right now it's just, there's no new money in terms of the alts. We had a little bit new money come in terms of institutional interest to the crypto equities, but right now, I mean, what's the point even?
There's a stablecoin market cap chart.
You just put in USDT dominance or USDT dots.
USDT market cap. No, because it's been going up, or I think it's been month over month. It's been going. No, stablecoin.
If you do USDT.D, the dominance.
Yeah, but the dominance isn't going to show me that because these are old. That's funny. No, I saw a chart which is basically like it was it's because we'll do the money supply chart like M2. What is USM2? Yeah, so this is United States money supply. There's a similar chart for this for all stablecoin issuance that looks almost identical to the US money supply. And I think, if we're talking just general liquidity availability being kind of like the backbone to a bull market, like this chart obviously shows that, it's been, we're obviously still off the highs, but money supply.
What if we don't need M2 to be going up in order to have a bull market? Like if you look at late 90s or the .com bubble, like you have rising rates and you have like falling liquidity.
M2
is an argument to be made
during the 90s though. But I mean, regardless of this, because we could talk about this for a while, but I'll have to find the chart and put it into TTC. But there is a similar chart to M2, basically showing that total stable coins available in the market has gone down. And I think that does kind of support the general, relaxation in price action. And once stable coins start to, rise again in terms of total liquidity, that could be a bull signal. So we'll have to table this, and I'll put it in a TTC later, because obviously it's not on TradingView. But what are there any other coins that we want to talk about? I know AMD got mentioned in chat, so we're definitely going to go over AMD for Bob, because Bob is always with us in chat, and we very much appreciate that. But are there any other coins or assets? I can share a Matic trade that I'm in currently that I shared with TTC. And this is another reason why you should be in TTC, ladies and gentlemen, is, we're calling out easy risk reward setups. So I saw that Matic was getting rejected at the 15-minute estimated 200 moving average, as well as the VWAP. And it didn't look like it was going to reclaim. So you set a short with a stop right at this level, because that's the local high for that move, and then you trade it down. And that was my bias. Now, you could have traded it up and with a stop here, but I did tell TTC that my personal bias was down. And this trade is working out so far. I think I entered right around the VWAP 7219. That's not the right one. This trade is currently working out at about a 1% trade. So that's enough to make my day. Certainly, I may exit actually very soon, considering it's hovering around that VWAP band. But this is why you sit in the TTC community. CJ's dropping futures trades. Monte's talking about all sorts of cryptocurrencies. We're dropping, obscure, crappy L2 trades. So this is why you sit in the community and you thrive off the analysis. So just wanted to cover that, because that's one that we called literally right before this meeting, or right before this show, and it's working out to perfection. So congrats to everybody who took that one. So Monte or CJ, do you guys want to cover AMD? Because you guys seem to have a better eye for the tech stocks than I do.
Yeah, no problem. That's something I'm more than happy to cover for my good friend Bob. And he also points out, we'd be remiss not to mention the fact that the markets are really rolling down in unison. And I want to get your guys' opinion on that in a second. But first, let me start by going ahead and pulling up that AMD chart for Bob and taking a look at that one. You're going to notice a lot of commonalities in some of these names, but note that structure that we were talking about earlier, right? That Livermore structure of accumulation and distribution, right? When you have that 11 point on the chart where you have a sell-off after reaching new all-time highs. Actually, this isn't new all-time highs, but local highs for AMD. And then you have distribution once again, and you put in that lower high. That to me was indicative of the fact that, okay, it's time to consider, closing out any long bias I have towards AMD, because I had been bullish on it, most of the year, but now I'm starting to take a more bearish bias towards AMD. And I think that, although this gap has been filled, and a lot of people have pointed that out, that, that gap being filled, we got a little bit of support there. This is one of the tougher charts to read, but I think what we need to do is take into consideration the overall market. And right now, we spent a half an hour dumping on the crypto markets and how they've been, crypto-related equities have been performing so poorly. It's not just them, right? Like, take a look at Microsoft today. Like, this is an ugly-looking chart. And are we at the point at which, we're ready to switch from bullish to bearish? Because we've been bullish all year. We've been, hammering the buy button, buying calls, talking about,
Hey, Monte, did you get any puts this morning, or anything you'd like to discuss in terms of put positions?
I did, but I feel bad because I didn't share with the community. I only shared it with you. But I did buy some meta puts on the market open. I'm actually already out of those because
he's anti-threads.
No, I just thought it was an overreaction to earnings, and I thought we were going to see a significant pullback. That, in conjunction with what we were seeing with the DXY this morning, led me to have the conviction to take that position. I apologize, community, for not sharing it with you guys. I just fired up my trade station real quick and made the trade right before we went live, and then I just didn't put it in the chat afterwards. And
hey man,
that's my bad.
no one's gonna fault you for quick firing, bro. You know that's what you
Yeah.
got to do sometimes.
Yeah, but I think it's worth a conversation, right? Like, are we at the point at which this bull trend is over? Because this is undoubtedly been a bull trend, right? And a lot of these stocks are looking very similar in the fact that, with the exception of a few of them, with the fact that they're rolling over, putting in lower highs. We just took a look at AMD. Let's take a look at Nvidia as well. Sort of a similar thing, right? Where it's unable to climb to that peak, showing some pretty strong weakness today. Does have earnings at the end of August, but that's a big gap that could plausibly be filled to the downside. And I don't know. What are your guys' thoughts on this? Like, because I've been bullish all year, and I would love to hear what you guys think. Now with this sort of price action out of the DXY, with a rolling over equity market, how are you guys feeling about maybe flipping short and lighting up on the long bias?
Well, I honestly had not checked the ES chart since I woke up, and woo, you're speaking some truth, Monte. That's nasty. We basically ran up overnight. Asia and crackhead US traders staying up all night trading that up, only to get absolutely dumped on right after market open. I mean, the market literally opened and it's been down ever since. So this is extremely worrisome. I would not have guessed that it would have broken this level so quickly. I would have expected some definite buying around 45.90. But let's just zoom out to the daily. So we tapped this March high. We've still got these December 21 highs that are still left hanging. But I mean, let's also think about the Livermore chart, right, guys? This is potentially a lower high after this. And we did kind of have this lower high, but if we kind of start zooming out more and more and more, talking about macro, look at the monthly. It's a little bit more obvious in terms of CJ's Livermore chart. Now, this does not look like an ugly monthly candle to me yet.
Bro, that looks like we're going straight to all-time highs in that monthly chart.
If I'm looking at the monthly, if the monthly closes as is, I'm probably not going to be too bearish. But, we still do have a couple of days left in the week. And the week is putting in a bit of a doji underneath that resistance level. So this is definitely cause for concern, and I'm not ready to jump on full bear, but I have been beating the bear drum on the Bitcoin chart. And Monte covered, the fact that we've been underneath, the 29.5 level. I'll go to my daily; it should look a little bit more smooth. But we've been underneath this level, and we're starting to break down lower. So I've kind of had the thesis that crypto is like the ultimate risk category, right? So we may see equities following if crypto makes a really sharp move. But again, they didn't really do that on the other two times either. So crypto could be just moving completely independently, and that's a little bit crazy talk. But back to that ES equal high, that is concerning. That's red flag number one for the bears, in my opinion. So I'd say I think you need at least 2 or 3 red flags to start piping in cash into shorts, but definitely red flags in my opinion. CJ, do you agree or disagree?
Yeah, I mean, in our newsletter last week or maybe the week before, I wrote about just kind of like lightening up in general on crypto equities and crypto kind of in general, just because, I was hoping for, and the market doesn't care about what I want, right? These are just things I say, listen to them or don't. But like, I was hoping for maybe a 5 to 10% pullback in stocks, at which case that's where you probably see a lot of folks get bearish, start loading up short positions. And if we're at a point where, you start to get, very, very bearish and everybody's And also you have the VIX at very, very low historic levels. Right now, the market's just kind of been climbing a wall of worry. And I think if we fall, 5 or 10% in the equity market, you're just going to see more and more shorts come in. Then you have the possibility of severely squeezing them and breaking into new all-time highs towards, 2024 and 2025, and really laying kind of the groundwork and foundation for the next like expansionary phase. If the whole Tom Lee hypothesis does end up being correct. Now, of course, you could go with the Druckenmiller hypothesis where things are obviously not as rose-colored as we would have liked to see, and then you do see a macro top in equities. Personally, I think we're going to see, the first situation where inflation's low, economic growth kind of can continue and rebound, and we already did kind of have a recession to a certain regard. If you want to talk about the 2 quarters of negative GDP growth, so with all that being said and all that macro LARPing aside, if we have a 5 to 10% dip in equities, I'm going to look for the equities that I really want to buy. And if a bid comes in and we see some support there, that's when I'll really look to be, basically put 80% of my net worth into Coinbase or something like that. But I don't know if that's going to happen. I'm not that great in terms of predicting short-term stuff like this. I'm going to react to price. And Monte, I understand your concern a lot. I'm not really on the aggressive front where I'm like, all right, yeah, let's take lots of shorts. I would feel much better just sidestepping a decline. Nothing would probably make me more angry than buying puts and having the market just continually rally.
Yeah. And that's been the case for everyone this year, right? I mean, that's what everyone's been doing, and it's been failing. And that's
now with that being said, did you guys see the Bloomberg reports of $7-10 billion of institutional cash coming off the table last week? There were 2 distinct Bloomberg reports of, I think, $7 billion coming off the table in equities. I think another one was quoted 8 or 9 billion. So let's call it 8 or 9 billion. But a lot of smart money took money off the table last week. And Monte, you've talked about this a couple of times. Rising prices, lower volume, definitely divergence opportunity. So I think we're talking about red flags. I've got 3 red flags right now. I got $8-9 billion in outflows. I got rising prices, lower volume, and I got an equal high sweep. Now, if we confirm lower, which means I probably don't want to enter anything today or tomorrow, but if we continue, if we don't head back up by early next week, I may start singing a little downside tune. Now, I don't think that we'll ever see, maybe ever is a strong word, but I don't think we're going to see those lows from October in 2022. That I would think would be a little crazy. But coming back down to that 3-day estimated 200 moving average, coming back down to the local highs from very early 2023, these are all plausible in my opinion. So I'm not buying puts yet. I'm not shorting SPY yet, but I've got my red flags. And I think we'll be talking about this definitely over the next couple of weeks.
Yeah, without a doubt. I think if a more secular trend emerges, I'll be more comfortable entering position. I did this morning, like I said, enter that meta put position, but like I did say, I'm already out of that. And because like CJ said, there's nothing more frustrating than buying puts and watching them and then watching the market, rip up. And today has been a pretty, I don't want to say historic day, but I don't know. Go back and read CJ's futures report from Sunday if you didn't yet, because you made a good case, CJ, about lighting up in ES, and I think that it could really be more than that. I think we could start to see that positioning really flip. I'm curious to see tomorrow's COT data and how traders are positioned after today's crazy price action. I think it'll be very informative in terms of what we're going to see next week. So I'm looking forward to your futures report on Sunday. But overall, for me, it's okay, we have this massive bearish engulfing candle on the S&P. right, on the daily chart. When is that not met with continuation? Not very often. At least 1 to 2 days of continuation, right? And also the DXY. Like, this looks very, very strong. It's not very often that we see, this sort of bullish engulfing candle after 2 days of, pulling back. And finally, we're seeing a resumption of that negative correlation between Bitcoin and crypto, or between the DXY and Bitcoin and equities. So now that that relationship's back on, I'm going to be paying some really close attention to this, because I think that we may be in the midst of a more secular trend. I think it may be time to consider, looking to the downside in terms of whether it be, perpetual futures plays, or more particularly for me, I think I'm going to focus on the equity market and looking at some assets that I believe to be oversold. Much of them are tech stocks, but you need to be careful. Don't want to just outright buy naked puts. I never recommend that. That's a great way to get just absolutely blown out very quickly. You may as well be gambling. If you need any help learning about how to, sell calls or put on a put spread, I'm more than happy to help you. Just reach out to me in the Discord community. I'm always there.
Monte, pull up that DXY chart one more time for me, please. Does this
All right, well,
remind
you're also gonna have to bring up the
Does this remind you guys?
bring up the yen chart.
Have we
Bring
seen
up the
this?
yen chart now.
Have we seen this before?
Yeah, that's me right now.
I'm sorry, but this is literally my favorite meme of all time, just because every guy in that room from that meme has a very special face for staring at that chart, and it's absolute comedy. So this does appear to be a bit of a complex pullback, in my opinion. Oh, no, that's not the 12-hour or daily chart, whatever. But I had to make that joke. I'm sorry. It's just too good to pass up. So what were you continuing on about, Monty?
Oh no, CJ had something to say about dollar yen. Please go ahead.
I was gonna say the dollar, or not dollar yen, but just straight up yen, had the exact same setup and completely fell through. It doesn't work. Like, it's a joke. That's why it's a meme. So
It's
yeah,
so funny though. I'm sorry to laugh and make a joke out of that. It's one of my favorite trading memes.
Wait, but what do you mean the setup didn't work?
if you go to if you were to look at the first red candle after right after the squeeze recently last week, yeah, like right there, that's where you would be going, oh, and it just completely dropped out.
They knew they know how the retail traders are trading now, and they're all trading complex pullbacks, so they're facing them now.
How much is yen up right now? That's pretty rare considering how well the DXY is doing.
It's up 0.59%.
It's only 13% of the DXY, but that is still impressive strength nonetheless.
Yeah, it is. And this chart actually looks really good to me. I hadn't really looked at it in a while.
Maybe CJ's got a yen trade for us coming up this weekend or next week. Fingers crossed.
I mean, CJ, have you ever seen the yen and the dollar moving in the same direction to this degree? I don't think I ever have.
It's because, that's when it has to do with positioning. You can have correlation breakdowns. And you did see the dollar and yen going up a little bit, like a couple weeks back, but yeah, that's interesting.
Well, we covered a heck of a lot today. I mean, it was a really good overview, I think, with FOMC being yesterday, and I think a lot of opinions coming out about whether we're more bullish, going to be bearish. I honestly, if you've been listening to us, we do not have a single opinion that we all share in terms of where directionality is going to head. But we are recognizing that there are signals cropping up that could mean a reversal is near to some degree. Now, we'll obviously continue to cover that in every show that we do Monday and Thursday. Speaking of CJ's futures reports, our daily email updates, our trade insights, our trade calls, all the conversation analysis and updates that get shared in the community, so you don't have to sift through Twitter and Bloomberg and New York Times and Wall Street Journal and all that crap. Signing up for Trade the Chain gives you pretty much everything I just named, and then some, because we also have a beautiful data dashboard and other products on the way to benefit your trading strategies and trading life. So you can get a 14-day free trial at tradethechain.com, completely risk-free, and you can join us almost immediately. And we would love to see you in the community and for you to read our emails and analysis and continue to ask us questions and engage. So with that being said, thank you very much for attending. We will see everybody on Monday. I'll be done with my move this weekend, so I'll be back and less disheveled for next week. And, shout out CJ and Monte for holding down the forts and keeping things lively and busy while I've been in travel mode. So appreciate you guys watching. See everybody on Monday. Good luck and happy trading.